SEC's Peirce expects the Clarity Act to pass. This summer, SEC Commissioner Hester Peirce said she expects the Clarity Act to pass this summer, according to a July 2nd post from CoinMarketCap citing her remarks. The comment puts a concrete near-term timeline on the bill that would set the first federal market structure rules for digital assets in the United States, splitting oversight between the SEC and the Commodity Futures Trading Commission. Peirce, who leads the SEC's crypto task force and has pushed for clearer rules since 2018, is one of the more crypto-friendly voices inside the agency. Her read on timing matters because the bill has spent months stuck in procedural limbo, and a sitting commissioner signaling summer passage is a stronger tell than another round of lobbying optimism. The bill that decides who regulates what the Clarity Act's core job is jurisdictional. It draws a line between digital assets that count as securities, which stay under the SEC, and those that trade as commodities, which move to the CFTC. That single distinction has shaped nearly every enforcement fight of the past 5 years, from the Ripple case to the wave of Wells notices sent to exchanges in 2023. Under the framework, most sufficiently decentralized tokens would be treated as commodities, and exchanges listing them would register with the CFTC rather than the SEC. Issuers would get a defined path for token sales instead of the current guess and litigate approach. For a market that has operated without a rulebook, the appeal is less about lighter rules and more about knowing which agency to answer to before launching a product. A rocky path to the floor, Peirce's confidence sits against a messier backdrop. In June, prediction market odds on the bill passing slipped to around 50% after President Trump redirected his attention to a different legislative fight, and the timeline looked shaky. Senator Cynthia Lummis has spent weeks defending the text against critics, arguing it contains more than 16 illicit finance safeguards rather than the loopholes opponents describe. Senator Elizabeth Warren and other skeptics have pushed back on grounds that a commodity classification for most tokens would pull them out of the SEC's investor protection regime. That tension is the main obstacle between Peirce's summer estimate and an actual signed law. A commissioner's expectation is a data point, not a whip count. The political ground has also shifted in ways that cut both directions. The Supreme Court recently ruled the president can remove SEC and CFTC heads at will, which makes both agencies more responsive to the White House and raises the stakes of handing crypto oversight to whichever regulator the administration prefers at any given moment. Market backdrop is cautious, not euphoric. If regulatory clarity were the only thing moving crypto, the timing would look bullish. Prices tell a flatter story. As of July 2, 2026, Bitcoin trades around $60,060, up 2.4% on the day, but down 2.8% over the week. Ether sits near 1,715s, also up 2.4% in 24 hours. The Fear and Greed Index reads 19 in extreme fear territory, which signals that traders are not pricing in a legislative windfall. That gap between headline and price is worth noting. Market structure laws reshape who can build and list products in the U.S. over years, not the next trading session. A bill clearing Congress in August would not immediately move the exchanges, custodians, and card issuers that depend on it, but it would remove the single biggest reason many of them have kept U.S. expansion on hold: practical stakes for spenders and builders. Clearer classification reaches further than trading desks. A defined commodity versus security split affects which tokens U.S. regulated platforms can support, and by extension, what assets back the crypto cards that let people spend those balances. Card issuers operating in the United States have long limited token support, partly because listing the wrong asset could invite an SEC action. A statutory line lowers that risk. For stablecoins specifically, the Clarity Act works alongside separate stablecoin legislation rather than replacing it, so dollar-pegged spending rails are governed on a parallel track. The near-term effect for U.S. users is narrower than the headlines suggest. The law would firm up the ground under existing products more than it would unlock a flood of new ones overnight.